Welcome back to another video on one of our multi-bagger Rezolve. The stock has slided from its earnings. Prior to earning, it was trading around $2.3. It went up to $3 and then it slides back to $2.4. Especially in last two sessions, it has dropped almost 15-20% from $2.8 to $2.4. So let's look at the news that came out for Rezolve. Rezolve AI goes directly to commerce.com shareholder with proposal to create a 700 million plus global agentic commerce powerhouse. Commerce.com is rebranded from BigCommerce.com, and that's a smaller version of your Shopify. When you look at this news, for an agentic commerce company, Rezolve AI, merging or acquisition of Commerce.com does make sense. Together, they will have a bigger and better agentic AI footprint. So they have a video dedicated to the Commerce.com shareholders. So here Dan is explaining about why the shareholder should approve it. So let's hear him out.
Your board and your management team have failed you. Since the 2020 IPO, they have overseen a 96% destruction of your equity value, offered no credible turnaround plan, and allowed Commerce.com to drift into irrelevance. It's now a zombie stock. No volume, no momentum, no vision.
Okay, so fair point, 96% decline of equity value since 2020 IPO. But what is the decline in your Rezolve's value? It has dropped 75%. I know I own that as stock. I believe the company performance, but that doesn't mean I cannot state fact. Fact is that BigCommerce dropped 96%, so Rezolve has fallen 75% as well. Stating this is, I don't find it useful in calling
Allow Commerce.com to drift into irrelevance. It's now a zombie stock. No volume, no momentum, no vision. You were promised growth, innovation, and returns. What you have instead is a leadership team extracting compensation as your capital erodes and the market leaves you behind.
Is calling the leadership incompetent. They are just squeezing money from commerce.com, so that's why they are reaching out directly to the shareholders. But literally, they are your first point of contact for this acquisition or merger, and you are literally berating them.
Commerce.com has real assets, an installed base of over 60,000 online stores, established enterprise relationships, and meaningful recurring revenues. The board and the management team have squandered them. In the hands of a team that knows how to deploy AI infrastructure at global scale, these assets...
So it is saying that it has global footprint and just hand it over to Rezolve so that they can manage it better
and become the foundation for something transformational. A combination of Rezolve AI and Commerce.com doesn't just add, it multiplies. Together they form a $700 million plus revenue global powerhouse that is instantly profitable. Commerce.com's enterprise footprint, paired with Rezolve AI's AI native infrastructure and explosive growth engine, unlocks value that current leadership cannot deliver on its own. This is textbook value creation for all shareholders. Combined revenues exceeding 700 million, a customer base supercharged by Rezolve AI's Brain Suite platform, and core software margins above 90%. By deploying Brain Suite and Rezolve Pay across your network of 60,000 captive merchants, we will instantly accelerate our proprietary payment rail rollout and secure robust monetization streams that your current management is fundamentally incapable of realizing. Your board chose to ignore all of this. They owe you an explanation. We doubt you'll get one. We're now moving forward with a direct offer to you. 2 shares of Commerce.com for 1 share of Rezolve AI.
The way he positioned Rezolve AI merger with Commerce, I like it. I personally believe this could unlock a lot of values for Commerce.com as well. But coming up with the offer of 2 for 1, so you're asking for $2 stock of Commerce, that's literally $5, with $1 of one stock of Rezolve, that's $2.5. So you're asking, hey, give me $5, I'll give you my $2.5 because it's mine, coming from Rezolve, so it has more value. This proposal is bound to fail. You cannot have 2 to 1 with the current valuation.
This reflects a disciplined valuation of your business relative to ours, and it is still far more than your board's current strategy will ever deliver. Why does this remain your best and likely only move? 1. Since its 2020 IPO, your stock has lost over 96% of its value.
Again, 96% versus 75%.
Standalone recovery is a myth. Your board and management have failed to articulate a credible plan to stop the bleeding while losing enterprise logos to the competition. 2. Commerce.com has become a zombie stock. You may see a price on your screen, but you cannot sell your position because there's low volume.
Liquidity should not be the reason for giving such a bad offer. I get it, you can give like 10% discount to them based on the liquidity, but you're literally saying at a half value than what is trading right now. So 2.63 and generating revenue 83 million last quarter or the next coming quarter. And what is the value of Rezolve? Rezolve is, I think, 2.4. So literally you're saying like, take my $2.38 and give me your $2.63. I don't understand that. How come they could come up with this and expect that it will be expected? Or this may be like...
Rezolve AI trades over 23.6 million shares daily. We're offering you a liquid currency that allows you to manage your own holdings.
Rezolve was not very liquid as well 6 months back. So I don't understand, like, how could you position liquidity as one of the...
3. Wall Street values Rezolve AI at $11 a share, nearly 4 times our current trading price.
Again, valuation, then why not like make your stock go up and then do the acquisition or merger? Like, you can wait 3 months or 6 months to see how your stocks perform. If it goes to $5 and you do 1-to-1 merger, then all good. I don't understand, like, Wall Street analyst rating as a criteria to say that, hey, let's do the merger. And let's check what is the commerce.com analyst value. So Zach mentioned $3, which is okay. But I don't find this as a very strong point to say that let's do merger, because analysts
By exchanging your shares for Rezolve AI shares at a 2-to-1 ratio, you are swapping a stagnant asset for $5.50 of an implied value, half of the $11 a share. This is a significant premium over
how he positioned itself. Do you see this?
For $5.50.
So you're saying like your $5.50
of an implied value, half of the $11 a share. This is a significant
will be becoming $11. So that's the analyst target. So you're assuming that you will reach to $11. So are we doing this merger in future or present now?
Premium over the terminal trajectory your board and management currently have you on. 4. Rezolve AI delivered 543% revenue growth in half 2 2020.
This is why I have invested in you. So
5 over half 1, reported 46.8 million in fiscal year 25 revenue and ended the year with 232 million annualized run rate. We've raised 2026 revenue guidance to 360 million, representing a 7.5 times year-on-year growth. Commerce.com, under its current board and management, is limping along at 3% growth. One is an AI-era growth company building category-defining infrastructure. The other is a legacy business in decline under its current leadership. We will proceed to file more detailed information about our offer with the SEC to allow you, the true owners of this company, to decide for yourselves. This is not a rescue. It's a transformation. Commerce.com's assets can only reach their full potential as part of a platform that's already powering the future of global commerce.
Okay, so overall, value proposition is fine, but the deal is not great for commerce.com. It's like commerce.com is a sinking boat, and we are the only bigger boat that can help you from not sinking. That's the value proposition as of now that Rezolve is providing. And it is asking that, hey, your boat value is $100, give it to me $50. One another thing that I don't like, if this merger happened, although he did not mention about any dilution on this, but there is a chances that they can go aggressively on this because they are directly pursuing the shareholder to go and demand for this merger. If that is the case, I don't think so it will happen at the 2:1 stock. So overall, I think it's a good move. If they can get this deal done, then obviously it's a great deal for Rezolve. But I don't think so this deal can close. If this deal can close, then we are heading for $4 easily. So my strategy is still same. Buy below 3, sell it over 4, do trade between 3 to 4, and do a sell call when it reaches to $4 or 3.5. All right. Let me know what you think about Rezolve's call out to Commerce for merger. We'll see you in the next one. Thank you.